All right, here we are. Welcome, everybody. Glad to have you here on a Wednesday afternoon. Yesterday it was audio issues. Today it was video issues. I swear, we just started this podcast up again, having not done it for about a year. I didn't realize we had taken a 1 year hiatus. We started doing the Moving Markets podcast. We did it for several months. It was a little bit of an experiment, admittedly. And then we went back to it just this week, and we've been kind of fraught with some technical issues. But yesterday it was 35 minutes after the time it was supposed to start. Today we're only 29 minutes after the time it's supposed to start. So I suppose the good news is that we're here, we're live, we're rolling. But the bad news is we're still dealing with a little bit of technical stuff. I had to restart my web browser because the camera wasn't working. Then I had to download some software. This is the same camera that was working fine yesterday. And I had to reload some stuff to download some software to get the camera working. It was just kind of a bizarre situation, but what are you going to do? I mean, it is what it is. This episode, well, let me back up a little bit. So we are Wednesday, June the 10th, 2020. The market has been closed for about 30 minutes now. I was hopeful to start this presentation right at the close of the market. Instead, the market closed about 30 minutes ago. That's okay. Things have settled a little bit. Dow Jones Industrial for the second day in a row finished to the downside, down 282 points, about 1%. Not a horrible, huge sell-off. The Dow for a very short time today went into positive territory, and then it just simply could not stay there. It just could not hold those gains. When let me tell you the other indexes really quick. The Nasdaq we have up 66.59. The Nasdaq finished above 10,000 points for the first time in the history of that index. Never before has the Nasdaq finished above 10,000 points. That's absolutely incredible. And I'm still somewhat, I know I shouldn't be, but I'm still surprised over this. I'm still a little bit shocked that this market, this index just continues to go up. I mentioned yesterday these people that wrote some article on the possibility of a V-shaped recovery if the Fed would lower interest rates below zero and go negative on interest rates. I wish these guys, maybe they did already. And I let them off the hook. I said that they probably started writing this article and started doing this research back in February or March. They probably got it finished sometime in early April, maybe in early May. Took a little while to get some peer reviews and actually get it published. But by the time it was published and made headlines, and they were so far behind the curve. If they're saying that we need negative interest rates for a V-shaped recovery, I would ask them to take a look at the chart of the Nasdaq index, the Nasdaq Composite Index. Take a look at that and ask me what shape that looks like if it's not a V. I mean, that is incredible the way that market has come back. I got to tell you, Jerome Powell was close today, yesterday and the day before, both days, Monday and Tuesday. I gave Jay Powell the only line he needed. I'm a little bit saddened that he didn't take my advice outright and that he did not answer every single question with the exact same phrase. The phrase that he needed to say over and over again was, the Federal Reserve remains committed to keeping this economy on a forward path, using every tool in our disposal, everything that's legal for us to do to keep this economy on a forward moving path and to continue to stimulate as needed. That could have been his comment. He could have repeated it over and over and over again with every question. He was close. He didn't miss it by too far. He said the central bank repeated its commitment from the April meeting and this is his quote, it expects to maintain this target range until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. So, Jerome, buddy, you were close. You were close. And look, his comments rallied things for a short period of time. Right after Jerome Powell spoke, the market immediately went up to its session high. The Dow briefly went into positive territory, and then it really sold off going into the close. That was the only disappointing thing about today for me, was the way, for the second day in a row, not only did we have a negative day, which in and of itself is no big deal. I mean, that's 2 days out of the last 8 where the Dow has been down a little bit. To me, that's just not that big a deal. It was right at, I believe it was right at noon Eastern time, or pretty close to it, that the market just had that spike to the upside. And then it started gradually giving it all back. About 30 minutes later, it dipped all the way down. 1 hour after Jerome Powell's comments, it dipped back down, not quite to its lowest point of the session, but pretty close. Then it had a rally and looked briefly with maybe 40 minutes left to trade in today's session. It looked like it was maybe going to rally back to positive territory. And even if the Dow had not gone all the way into positive territory, just a little bit of a rally back to maybe being down 75 points or being down 100 points would have been really encouraging to me. Instead, in that last 40 minutes that the market was open, and especially when the market had about 9 minutes left to the close, when there were like 9 minutes left to the close, the sell-off really accelerated. And the Dow gave up in those final 9 minutes. The Dow was trading at about 27,079. And from there to the close, it went down to 26,985, gave up about 100 points. Is that right? 27.99 down to 26. Yeah, gave up about 110, 115 points. Sorry, I've got my computer screen on here and I'm looking at 109, 110 points in the last 9 minutes that it was open. Now, for those of you that don't watch the markets as closely, or maybe you're learning a little bit more about the markets, couple of things that cause that to happen. Number one, there is some computer trading that goes on at the end of the day. Brokers and individuals are trying to clear out open positions that they had. The day traders sort of come in and rule the show a little bit in that last 10 to 15 minutes. There are people that are getting into positions in that last 10 minutes the market is open, and they're getting into a position that they hope will see a big movement one direction or the other, whichever, and they may be positioning it for a specific direction. They may be positioning it for something neutral. They just want a big move one way or the other, but they get in that last 10, 15 minutes that the market is open, and they hope that at tomorrow morning at the open, futures are way up or way down, depending on which way they're trading, or either one if they're trading non-directional. And they're just hoping for that big early movement. So they get in at the end of the day, and whatever they're going to get into, they jump out in the morning. That's one thing that can cause those biggest movements to come, or those really dramatic movements to happen in that last 10 or 15 minutes. And then some of it is the brokers that are trying to clear orders out of their system. If they've got something in place that is close on a limit order that they can sell, or some orders that they can fill, they try and do that. And so whether it's to the upside or the downside, that's why there tends to be that heavy activity. And then some of it is some algorithm trading. There's some stuff that goes on right at the close of the market that is based on the algorithms that are in place. And so you've got that happening. So a little bit of a disappointment that there was that sell off into the close. I don't know that you want to read too much into that. Like I said, if you were to look at a chart of the Dow, I know if you're listening only to the podcast versus watching the YouTube live, you've got on the Dow Jones Industrial Average, we're still holding above. I mean, just barely. Actually, we finished just barely below 27,000 today, but we're still right up at 27,000. I don't see slipping much more than that. Yesterday and today's move brought the Dow Jones Industrial Average out of what we consider overbought territory. The Dow has been, for the last 3-4 trading days prior to yesterday and today, it's been in what we would refer to as overbought territory. And that just means that conditions are right for people to take a little profit off the table. No big deal that they did it a couple of days in a row. You've still got, like I said, you've got not only 6 of the last 8 days, but you could say 6 of the last 10, 9, 6 of the last 10, 7 of the last 11, 8 of the last 12. You've got 8 out of 12 days that the market has been up. If you were to look at a chart of the Dow Jones Industrial Average, you go back to May 26th, you had 2 days in a row of strong upward movement, 2 days in a row that gave a little bit back. Those two kind of wash each other out. Then 6 days in a row of really, really strong movement to the upside, 1,500 points in those 6 days. And then to give up, a combined total from where the Dow finished, it closed on Monday at 27,572. It's given up a total of about 600 points in 2 days. You don't like to see that. You don't love that to be the case, but I think it's not a big deal as we move forward, as we move into the next couple of trading days to end this week. I think there's a better chance than not that you get a little bit of rally and a little bit of an upward move. One of the things that Jerome Powell did say today is that he sees a strong recovery going into next year. He expects to keep rates at or near zero through the end of this year, or actually, through 2022. And he sees the GDP rebounding back up to 5% growth in 2021. Now, that's after tumbling 6.5% for 2020. So, the give and take there, I think Jerome Powell tends to be cautious. And if he errs on the side of being a little bit cautious, which is probably part of his job. I'm not even criticizing or picking on him for that. But I think you've got people like Larry Kudlow. I think you've got people like Steve Mnuchin. Certainly the president are going to probably predict a lot more growth than that in 2021, and maybe not as much of a contraction in 2020 as what is being said. I'm not crazy about the Fed buying bonds and mortgage-backed securities to the tune that they're doing it. They're pumping money into the economy that has the ability to devalue the dollar, and I don't love that necessarily, but I understand the necessity of doing it. And I look, he's made a couple of key mistakes. Who amongst us does not? Overall, I think Jerome Powell is doing a pretty good job. I miss the days of Alan Greenspan. I never saw this from Ben Bernanke. I never saw this from Janet Yellen. I genuinely miss the days of you got to go back to Alan Greenspan. You got to go back to the 90s and the early 2000s when Alan Greenspan was the Fed chair. And every month or 2 months when the Fed would meet and make a decision on interest rates, Alan Greenspan would, of course, do the obligatory question and answer thing following that. And what I loved about Alan Greenspan is that the guy could talk for 20 minutes and not say anything at all. And for a Fed chair, that is a gift and a talent. And it is something that I think they should work at and try to do. Let them talk as long as they want. Let them bloviate on as many subjects as they want. Let them, let them have the camera for a while. I have no problem with that. And in fact, I know it's part of their job. Appease the politicians and have your little press conference and appease the media afterwards. But learn how to talk as much as they'll ask you questions. Learn how to talk and not say a word. That is a gift. I hope you don't feel that way about me, but for a Fed chair, that's what they need. It needs to be less about their comments and more about their actions in terms of what's moving the markets. And that's where I wish things would go. By and large, Powell is learning that. I think he's doing a good job overall. I think he'll continue to get better, and I hope he's in the position for a while. I like the moves he's making for the most part, with only a couple of exceptions. I like the moves that he's making. I just don't always love the commentary that he makes that goes with it. So that's what happened in the markets today and what's moving things. You've got some other things that are newsworthy. I'm looking at this on CNBC. They always do an article in the last maybe hour, the first hour following the end of the trading session. You can usually find a little headline on CNBC called "Here's What Happened to the Stock Market on Wednesday or Tuesday or Thursday, whatever day it is." These are a couple of things that they highlight. They mention the Dow sliding, but the Nasdaq finishing up and finishing it on an all-time new record high close. Market rotation continues. American, Delta, and JetBlue fell more than 7%. JP Morgan, Citigroup, and Wells Fargo dropped 4%. There's some things rotating out of the Dow stocks and out of the bank stocks and the travel stocks, and rotating. Market rotation, and just in case you don't know, market rotation is when things move out of one or two sectors and the money shifts to other sectors. The winning sectors today are Amazon, tech sector, Amazon, Apple, both up strong again today. I did not see where Netflix ended up today. I'm actually going to pull that up I'm not going to try and pull that up on a computer screen because I can get to it faster on my phone. That's why I'm looking down at my phone right now. You had, what did Netflix do today? Because they were a big winner yesterday. Netflix flat today, only up 43 cents, probably because they had such a huge move up yesterday. AMD and Micron, two of the chip manufacturers, AMD up another 2% today. Micron is one of the chip companies that I follow a lot, down just a fraction today, kind of a mixed bag. But like I said, Amazon, I cry a little bit. Amazon up another $46 a share today. Amazon is up over $135 a share in the last 2 trading days. I get a tear in my eye when I look at Amazon because I could have gotten into Amazon years ago at $50 a share. And my rationale and my justification for not getting into Amazon seemed really good at the time. Hindsight's always such a good reminder. You know what hindsight, people say hindsight is 2020. I think hindsight is a reminder of how well we screwed up, how sufficiently we screwed up years ago. That's what hindsight does for me. Rarely does hindsight a reminder of me to, oh yeah, that was a brilliant move I made several years ago, or gosh, I'm glad I did that several years ago. We don't usually talk about hindsight in that context. Usually if we're mentioning hindsight, we're mentioning it because we're vividly aware of how we screwed up years ago. I screwed up by not getting into Amazon many years ago. So, anyways, what are you going to do? I mean, there's so many would have, could have, should have. One other headline that I saw today that I found pretty interesting is that penny stocks are up 80% over the course of the previous, I think, 1 week. I think that was what the headline was. Penny stocks up over 80% in the last week. Good and bad in that headline. That to me is a little bit scary because penny stocks are so speculative. You can really, you can make a lot of money, but you can lose a lot of money really fast when you start going the route of penny stocks. You got to be careful with it. It's just not something. It's just not something that you want to see happening on a regular basis. Another interesting headline I found today. You may have heard this news today. Starbucks taking a $3 billion hit to their revenue during the pandemic, and I heard that in North America they're going to permanently close 400 stores. Now, I got a little bit to say on Starbucks, just a little bit. Great company. At times I have traded Starbucks with options. I've traded Starbucks stock from time to time. Overall, I think they've been a strong company. I think they employ a lot of people. I think there's some good things they do. How many coffee stores do you need though? I mean, seriously, I'm not a coffee drinker. So I have to be careful that when I weigh in with an opinion on something like Starbucks, I'm doing it from the perspective of someone who doesn't drink coffee. I'm not here to comment or critique an addiction to coffee. We all deal with our own addictions and our own things that we worry about a little bit. So it's not my intent to point a finger at anyone who is a coffee drinker. And most of the world drinks coffee. I mean, I'm way in the minority not being a coffee drinker. So there's a part of me that doesn't get it. There's a part of me that says, number one, why would you pay such a ridiculous price for Starbucks coffee? Is it really, truly that much better? Is the flavor of Starbucks coffee really so much better than what you'll get for $1 at a McDonald's that you've got to go pay $5.50 or $6 for the same size coffee at Starbucks? Some people would tell you, yes, it is. Absolutely. If you were talking Starbucks coffee is $1.50 and McDonald's is $1.25, and you say, you know what, for 25 cents, it's worth it to me to have the better coffee. It's worth it for me for a better quality. For 500 or 600 or 700% more. I mean, if you're getting a cup of coffee a day, do the math with me on this. And again, this is not a critique. This is just me not understanding. Let's say you're getting 1 cup of coffee a day and you're going to Starbucks for $6. Multiply that by 365 days of the year times $6. You're spending, I don't know if you know this or not, you're spending $2,100, almost $2,200, $2,190 on coffee. And that's if you don't leave a tip. That's if you never buy anything else in Starbucks. That's if you don't get a croissant. That's if you don't get a breakfast sandwich. You're just buying the coffee and nothing else. You're spending $2,200 a year on coffee. Okay, we all have our things. We all have stuff we spend money on. And I'm not here to point a finger. I'm not here to judge or criticize anybody. But if you can get a cup of coffee for $1.25 at McDonald's, times that same 365 days of the year, you're spending less than $460, less than $460 on coffee a year. And no one at McDonald's is expecting a tip. I've been into a Starbucks before. I'm not a coffee drinker, but I've gone into Starbucks. I've got a hot chocolate there in the winter before. I've gone in and got a drink, like some other non-coffee beverage before. I've eaten a breakfast sandwich there. I had a daughter that worked at Starbucks for a little while. I got nothing against Starbucks, but I'm telling you folks, $2,200 versus $460. I mean, that's a vacation. That's a vacation over your snobbish preference for Starbucks coffee. Now, I'm gonna piss a lot of people off. I'm sorry. I'm gonna tick a lot of people off. I'm gonna upset a lot of people who are loyal to Starbucks. And if you think for 5 or 6 times the cost, Starbucks is that much better a product, then God bless you and keep supporting Starbucks. And I'll keep trading their stock when it's appropriate. But when I hear news that Starbucks is going to permanently close 400 of their stores in North America, with 200 of those being in Canada, who has a fraction of the population the U.S. has, I'm looking at that and I'm saying, Starbucks has had a pretty amazing business model. They have done, give the people at Starbucks credit for convincing people that paying 5 times more for a cup of their coffee than what you can get in McDonald's is a smart thing to do. Kudos to them for convincing people of that. But don't be shocked that they're closing 400 of those locations, because when money gets a little bit tight, people wake up and they say, hey, I'm not going to be without my cup of coffee for the day. Okay, I'm not going to go without my cup of coffee, but I'm sure as heck not going to pay 6 times the price for that Starbucks coffee as what I'm paying for somewhere else. And I only use McDonald's as a comparison. McDonald's coffee might suck. I don't know. Again, I'm not a coffee drinker. So it's just, I find it interesting. I find it curious. And it's always funny to me, people's behavior. Generally speaking, people's behavior. All right. A couple other things that are in the headlines that I am going to comment on today. These are some headlines that are coming across Fox Business News. They got the same headlines about the Fed. They've got a headline saying the White House to seriously look at a second round of stimulus checks, according to Steve Mnuchin. I sincerely hope there is not another round of stimulus checks. I'm going to take the last 5 minutes that we have of today's podcast, and I'm going to tell you what's wrong with the stimulus checks. Let me tell you the major screw up that our government made that is not being talked about by very many people. I know there's a few people talking about it, so I may be echoing a few others. But here's the problem. The unemployment in this country went from about, I think, less than 5%. Maybe it got down around 3%. And it went up to, I think, 16 or 17. Everyone thought it was going to be up to 20%. It went up to about 16%. All right. So 3 times the number of people unemployed. The number of people, not the percentages, but the number of people that filed new unemployment claims in that 6 or 7 weeks that things were the most serious with this pandemic, ended up being in the neighborhood of 30 million. Okay. We have 300 million people in this country, not all. I'm sorry. We have close to 400 million. We're getting up closer to 400 million people in this country. I don't know what the official number is, 360 million, I think. So you're talking about less than 10% of the overall population, but not the overall population works. You've got retired people, you've got kids, you've got teenagers, you've got children who are not part of the working class in the country yet. So, 30 million people being out of work is a pretty big hit relative to the number of people who could be working, because that's what the percentage is compared to, the number of people who could be working. So, but then we find out that in the month of May, we gained a net almost 3 million jobs. So the number of new jobs, people going back to work, outweighed the number of people losing jobs by 3 million. So you take the 4 weeks in May when new unemployment was going up 5 million, 6 million, 4 million. I mean, of those unemployment numbers, of the 30 million or 35 million that it went to, I believe somewhere in the neighborhood of 10 million of those, maybe 10 or 12 million of those, were still being reported in the month of May. And with that many being reported in May, but 2 million more people going back to work, that's why we didn't end up at a number around 20%. And instead, we ended up at a number around 15 or 16%. So here's the problem I have with the stimulus checks that went out already. I look around my neighborhood, and I'm judging this now. And my reference point is that there's a 2-block, 2.5, maybe 3-block radius that I live in that are mostly members of the same church congregation that I meet with. I go to church every week when I can, when it's open. And this is the group of people that I meet with. So I know people in other parts of the neighborhood. I know people that my kids go to school with. This isn't my only circle of friends, but I'm looking around the neighborhood that comprises the congregation of people that I go to church with. And you're talking somewhere in the neighborhood of 100 families, ballpark. That's not an exact number. So this is my point of reference. I look around these 100 or so families in my neighborhood. I'm aware of 2 people. Who either had their hours cut back or they completely lost their job. At least in one case, I know it was temporary and they're going back to work. In the other case, I think there was a serious reduction of hours. So in my circle of, and I know there's parts of the country where it is way, way different than this. Okay. I know that. So I know my point of reference is skewed, but where I live, my immediate surroundings, 2 people felt a financial impact that was related to a job loss temporarily or an hour reduction. Okay. I know of about 3 other people in that same radius, in that same area, who are small business owners like myself. And they saw a bigger hit because of business slowing down. They didn't go out of business, thank heavens. They didn't lose everything they had, thank heavens. We didn't experience any rioting and looting in the part of the country that I live in, thank heavens. I'm grateful for all of those things, and my heart goes out to the people that did experience that firsthand. But all but a handful of people in that same area got stimulus checks, and they simply did not need them. Nothing changed for them. They started working from home, or they continued to go to work without a change in their hours. They may have saved some money on some school fees for field trips. We got some money back from our kid's school for a play that he was going to be in the spring, and that time has already come and gone, and school's over for the summer. We actually got a little bit of money back on that. We carpool my son and a couple of friends of his to school every single morning, or we pick them up every afternoon. We trade off with another family. We've saved a whole bunch of money in gasoline on that. Other people in our neighborhood have had the same thing happen. For us, the direct impact, my circle of influence, my circle of friends and neighbors, the direct impact was maybe 3 or 4% of the people, and it wasn't a heavy impact, but everyone got stimulus checks, all but a handful of us. I made just barely too much money and I'm not, and I don't begrudge them for getting a stimulus check. I don't think they should have signed it back over to the government and said, hey, Congress, we think you could spend this money better than us. That would have been the stupidest thing in the world they could have done. So I don't begrudge anybody that got the stimulus check. I don't blame them for it. But our politicians are full on freaking morons. Collectively, they don't have a brain to share between them because they didn't measure who needed that money and who didn't. Even if they would have taken the same amount of money, the exact same dollar amount of money that they gave to the whole country in stimulus checks and said, look, if you didn't lose a job, if you didn't see a reduction in your hours at work, if nothing changed for you, except you saved some money on gasoline by not having to commute into the office every day, if nothing else changed for you, you don't need a stimulus check. How much more money is that to help these restaurants and these stores that have been looted and destroyed by rioters and gone out of business, and there would be more money for them? How much more money would there be for small businesses who couldn't get a business loan because the money ran out or because the qualifications were just a little bit too strict, just a little bit? I know several business owners who tried to get money in relief of what happened and they couldn't. The money ran out. But I got neighbors on all sides of me who didn't need one single penny of that money. And they just stuck it in the bank. It's a rainy day fund for them right now. And again, I don't begrudge them getting it. It was just asinine for our politicians to hand out money that freely. That's my tax money. That's your tax money. That should piss you off. And I don't know why it doesn't. I get why the government had to act quickly. I get why they had to move fast. I understand it didn't have a lot of time for debate because there were people that were feeling the immediate, instant impact of this pandemic and this lockdown that we had in our society. I understand it had to be done. Just a handful of smart people who cared a little bit more about your money and recognize that it's not their money they're spending, it's your money they're spending. They don't give a crap about spending your money. They'll spend it freely. It's not a Democrat-Republican issue. It's not a liberal-conservative issue. It's a politician issue that these people don't stop to think. I pray the government does not do another round of stimulus checks. Don't extend the unemployment benefits, the added ones. Don't extend the added unemployment benefits. Give people more incentive to be back to work than incentive to stay home. And this economy will get back to a rip-roaring pre-pandemic economy sooner than later. And this is not rocket science. You don't have to be an economist to figure this out. You don't have to be a Pulitzer Prize winning economic professor. In fact, economic professors at most colleges in this country are the least qualified people to weigh in on this because collectively they're morons. They teach socialism and communism more than they teach common sense economics at most colleges. You want evidence of that? Don't look past Boston College, where Alexandria Ocasio-Cortez got a degree in economics. If that doesn't tell you that college economics courses are the least qualified to weigh in on common sense, nothing else will convince you of it. All right, I could get off on a whole nother tangent on that. Our time is gone. Thank you for tuning in to another episode of Moving Markets. Remember, our podcast is on Apple iTunes podcasts. Our podcast can be found on Google Play. Our podcast can be found on Spotify, and our podcast can be found on Stitcher, or you can go to our website, sostrades.com, and look for the link to our podcast, or you can subscribe to our YouTube channel. There's all sorts of ways you can watch this podcast or listen to this podcast. Don't miss it. We'll be back again tomorrow. We'll have everything ready to go at 4 o'clock Eastern time. We'll make sure there are no audio issues. We'll make sure there are no video issues. We'll be ready to roll. And tell everyone you know about our podcast. If you enjoy it, if you hate it, tell them, say, listen to this moron on the podcast. Listen to what an idiot this guy is. Just tell everybody about it and tell them where to go and subscribe. If you want to learn more about safe option strategies and trading money in the market at the absolute lowest risk way that is possible to be in the market. Folks, I'm telling you, you can be in the stock market with little to no risk and still give your money a chance to grow. Check out our website at safeoptionstrategies.com and reach out to us if you have any questions. I'm going to make a plug for Pike Builders. If you want to build a luxury cabin, if you're a multimillionaire, you want to build a luxury cabin and you want to do so in the Island Park, Idaho area, one of the most beautiful parts of this entire country, you need to look up Pike Builders. They are the sponsors of today's show, and that is where you should go if you want to get a cool luxury cabin. I know Mark Pike personally. I have seen some of the cabins that he has built, and I got to tell you, I hope the day comes when I can afford one. Anyway, sponsored today by Pike Builders. Check them out. Have a great day, everybody. We'll see you back here tomorrow. Bye-bye.